morning.
Greece has finally landed financial aid, but there's still lots of concern of a spillover, particularly to Spain and Portugal. We saw Portugal getting a downgrade last week.
And Italy, to be perfectly honest. These are countries that haven't managed their finances properly for the last decade and now are going to have to pay for it. And the two biggest economies next door, France and Germany, don't really want to be seen from a political point of view as having to backstop, I beg your pardon, these more marginal economies, simply because it's a political hot potato. Why would you, as Angela Merkel, want to bail out one of the more marginal economies? Because as a percentage contributor, I think it contributes less than 3% to the overall Eurozone GDP, when she's got an election coming up here sometime in early May. So it's come at a bad time, to be perfectly honest. But you're right. Focus is going to move away from Greece if they've seemingly solved their problems. They're still going to have to pay for it through the nose. You know, last time they raised money, and they're going to try and raise quite a lot of money, as far as I understand it, before Wednesday. As you mentioned, a particularly quiet week. They've got a lot of money, I think 23 billion euros that they need to. So, and they're going to have to raise that at 6% plus, to be perfectly honest. That's what investors will demand. They'll be demanding those types of yields. So, you know, George Papandreou can blame speculators or whoever he wants for having to pay. But to be perfectly honest, the finances of the of the country have been in tatters for the better part of a decade, and perhaps even beyond that.
Despite the short noise from Greece, Portugal, Spain, there seems to be a positive sentiment that's running through global markets. We saw the Dow edging towards that psychological level of about 11,000 points.
Yeah, I suppose I'd be more happy if it edged to 14,500 points, the October 2007 highs. But, you know, we're a long, long way from that. So let's still remind ourselves that we're a good 35% away from the all-time highs. So there's a lot of work to be done. And to be perfectly honest, housing still looks a little bit ropey and needs a little bit more government impetus. So, and plus the US is still raising vast sums of money, stoking short-term fears about, well, I beg your pardon, long-term fears about inflation and how they're going to pay down that debt. And those types of sentiments were echoed by Bernanke in a testimony last week. We said, look, we need to start reining this in. But again, it all boils down to it's a political hot potato. Why do you want to be seen withdrawing at this kind of critical juncture? I think he's more along the lines of, no, we won't retract stimulus for the time being, but it is a concern of mine long term. And I think there was an Alan Greenspan interview last week too, where he gave quite a big public interview, and he again echoed those similar type of sentiments, that the US needs to rein in their spend. But I often equate this time in history to post-Second World War, you know, where there was extreme spend and there was we have to get the economy back on its feet in order to be able to produce properly again, in order to be able to function properly again. And the risks we face in doing that is that obviously governments have to pump a lot more money into the systems.
Getting the economy back on its feet. We've got employment figures out on Friday. Analysts are expecting 107,000 jobs to be added to non-farm payrolls. Are you seeing that being added?
Yeah, look, it'll be the first real month. Remember that these are taken into context versus a February where there were these incredibly poor weather in many parts of the US. I think it even snowed in Florida, or was that in January? But that's besides the point. It's been a very cold winter. So construction jobs, as a consequence, have led the decline. And government jobs have been kind of steady, but the temp jobs have bounced back quite strongly. So what people want to see is an indication that the temp jobs are turning into real jobs.
We don't have much news flow out here in South Africa, but we've got Capitec out with annual results. I think it's on Wednesday or Thursday. What are your expectations on that stock? Are you a favorite of that stock?
No, we tend to hold African Bank. Now, they it's slightly different because Capitec, you must remember, is a full retail bank, so they take on deposits and then lend it out. As far as I can understand from a few people in the know, the quality of African Bank's book and their ability to raise money is obviously much better simply because of size and scale. But I think Capitec is Capitec is more an urbanization story for me. So having looked over the last 15 years and said to myself, as a trend, if you had followed and believed that urbanization plus also credit extension being at a very low base was going to take place. And I think you'll probably find over the next 15 years or decade or even 5 years that they're obviously going to start eating into the bigger players in the market. And that must be a concern for them, you know, having built this amazing brand. I mean, you can just ask, you know, colloquially, if you ask someone, what is a good brand out there on the ground? Capitec often comes up as a good brand. So that brand loyalty should feed through over the coming years, provided they can, you know, keep bad debts together and keep doing what they're doing, because seemingly they're seemingly they look expensive though. Having said all that, they look expensive relative to their peers.